Hello, ladies and gentlemen. Here is again the Boring Lectures channel from Kleve, Germany, with some ideas on international taxation and law. This time you get confronted with part 1.3 of General Introduction to Tax Law. That's a beginner's lecture, and our topics for today will be principles of taxation. Our audience is also here and has full motivation to learn. As you see, happy eyes. So nobody hinders us to begin with thinking about the principles of taxation. Now, the first question is again, why do we think about that at all? Because when you look to what people in the press write or what politicians very often seem to think, then there seem to be no principles of taxation necessary. Evidently, they have very often the idea that everything is possible with tax law, that it's just an arbitrary thing, and the answer to that is, first, it's not true. There will be some principles or basic rules which you have to follow if you want that a tax law really works. And we are going to have a look on these major or most important principles. The most important ones are probably legality or legal certainty or a legal foundation of taxation, and the principle of equality of taxation, so that tax laws must treat equal things in an equal way, and why and what that means in detail, that's our topic for what is going to come. The idea that tax laws should follow some rules, basic rules, goes already back to Adam Smith, a famous economist in Scotland, who in 1776 published his famous work, The Wealth of Nations. And there he set up 4 principles for taxation. That was equality of taxation, certainty, that means the tax laws have to be clear. The taxes should be levied in the most convenient way for the taxpayers, and he also set up the principle of economy of taxation, which meant you should not design the administration, so the bureaucratic stuff of a tax, so complicated that this causes unnecessary costs. So taxation should be done in a cheap way, because otherwise, in addition to the necessary tax revenue which the state must collect, it would also have additionally to cover the bureaucracy costs, and so disregarding the principle that the administration should be cheap leads to an unnecessary increase of the fiscal burden which the people have to bear from taxation. Well, let's talk about the first principle which I mentioned. That was the legality of taxation, so that there must be a legal base. Very often this is simply put into the phrase no tax without a law, without the legal basis. The question is naturally first, as always, why? If we go back to nearly the Middle Ages, or the end of the Middle Ages, there was a famous professor of famous researcher, a doctor, Thomas Aquinas, who, among many other theories, brought forward the nice insight that tax is nothing else than an allowed case of robbery. He called it an allowed case of robbery or theft. And indeed, if you look to the basic nature of taxation, that's not far away from the truth, or even that is the truth, because a tax is something where money is taken from you by force. It's a compulsory payment, and you get nothing in return, and nobody asks you if you want to pay or not. So, indeed, the main characteristics of taxation are very similar to stealing. And then naturally, the emotional reaction of people to a tax will be similar to a theft. Now you can even bring the parallel or regard the parallels more closely. Theft is forbidden by law. If taxation in its basic nature is nothing else than stealing, now done by the state, you have one simple insight, simple conclusion. If stealing is forbidden by law, then things which are forbidden by law can only be allowed by another law. And that brings us to the necessary conclusion that usually taxation can only be allowed by a law, because otherwise it ends up or can be qualified as something which is forbidden. So only a law can bring an exception to what is forbidden by a law. Yeah? If we accept this as something which is basically true, we immediately understand that usually allowing to levy a tax is by the constitution of a state usually not allowed to everyone in the population or every institution. Usually the question what can be levied as a tax is reserved to the highest legal instances, higher legal bodies in the country. For example, the representation of all citizens in parliament, or a king, the head of state, or what else. It must be a very high-leveled institution. Usually, if we follow that logic that what is forbidden by law can only be allowed by law, a tax can only be made up, a tax claim can only be brought forward by an institution which has the right to make a law. On the other hand, it's clear that if every single individual civil service, every state officer could have a right to levy a tax, a right to take away a part of your property, then you end up in chaos, because then usually these people will do that and you have no protection against that. So there are good reasons to reserve the right to design a tax to an institution which is at a very high rank in the chain of institutions, so very much to the top or even the highest institution, and that the let's say the conditions which you need to levy a tax are relatively strict, so that not everybody working from the state can come to the idea to take your property away, because then you get plundered by everybody, can't foresee it, and so that makes sense. Why is there the principle that with taxation there should be legal certainty or clarity, that the tax should be clearly determined? Well, the first thing is clear if we think again on our principle that what is forbidden by law can only be allowed by law. If the law which defines a tax claim is not clear, but just makes an overall blah blah about that a tax is possible, then the tax in itself and how much you have to pay is not really stated in the law, but it is then the person who just interprets the law and brings forward, it's my opinion that you have to pay 120 euro. Then you say, big surprise, didn't read that in that law. So in the end, that would not be the law stating the tax, but the person stating the tax. And then you end up again with thousands of people reading a law, and everybody draws different conclusions. So if you want to have legality of the tax, that you say a tax should be laid down in a law, then you must draw the necessary conclusion that the tax claims should be defined in that law clearly, because otherwise they will only be made concrete outside the law, and then you have again a chaos where everybody applying that law can do whatever he or she wants to. And so in the end, it would not be the law which governs the whole situation. And number two, what would happen if you have legal rules about taxation which are not clear enough? Then, and that is not always seen, then your property rights are damaged more than they need to. Why? Naturally, when I earn 1,000 euro, my first question will be how much can I keep of that and freely spend? How much will be claimed by tax and how much is for me? Now imagine if I can't find that out. I have the wrong impression that the state is going to take away 200 euro, so my conclusion will be 800 I can freely spend, so I spend them. You know, most people are this way, I am too. We have 800 euro, we tend to spend 810, but not less. So now imagine that after a while you get the information, no, it was not 200, it was 300 or even 400 what the state claims from you. Now the money is already gone. So you would be bankrupt, would face criminal prosecution because you didn't fully pay your tax, others did. It's probably a crime. So big trouble. Now if you are a bit wiser, or if you have experienced this catastrophe once or twice already, or seen that happen in the circle of your friends, then you draw conclusions. I have 1,000 euro. I believe that 200 are for the state. Okay, one never knows. Might even be that in the end the state wants to have 500. So these 300, which might be debated, I'm not going to spend them. I will save them because one never knows. With certainty, I can only spend and enjoy 500 or 400 or don't know about the government. Perhaps I should restrict myself to bread and water, forget about every holiday, try to get through with 200 because one never knows what the state will claim from the rest. That would mean it spoils all the fun. Why do you go to work? Why do you why do you try to gain 1,000? Because you want to use it for your own purposes, so you want to spend the money. Okay, now if you can't spend it because there is always the risk that the state might claim it, you will lose your interest in earning money, and you have money which you can't spend. There is always the risk over your head. And you find it out only after 1 year, 2 years, or so on. So you have money and you can't enjoy it, can't use it freely. And that's far more than the necessary restrictions which the state must impose on you. It's normal that the state needs money, let's say 200 or 300. So we all agree that the state needs that money, and there must be a possibility that the state takes it. Good. But it would be unnecessarily harmful to you and me and others if you also can't use, let's say, another 200, 300 or 400 of your money until after 2, 3 or so 4 years, because you don't know how high the tax claims are. And so a very basic principle is a good taxation must have legal certainty. The rules must be clearly determined. You must be able to find out in advance that there is a tax claim. Now, as you know, perhaps in real life that's not always possible. Um, there have been cases where even tax advisors say we don't know exactly how high the taxes are because you stumbled over a completely new legal problem which nobody has ever foreseen. But at least one thing is again necessary, an important requirement. People who occupy themselves with reading the tax laws and learning a bit about the stuff should at least be able to give you the information that there is perhaps a tax claim and how high it would be. Um, there are cases where in real life you ask a tax authority, so the fiscal office of your city or so, the people who will later issue your tax notice, how a certain thing will be taxed. And sometimes they say, we don't know. And that is, if you measure it in front of the background of that principle, that is a thing which is entirely unjustifiable. If a tax law is written in a way that even an expert cannot foresee, or even the people who are going to apply it cannot clearly state in advance how high a tax claim will be, then that is highly unfair. And it is, yeah, a sign that the system is not, absolutely not perfect, that there are grave problems because you have huge additional damage done to the people, as I described you here. So the consequence of legal certainty and clarity of taxation must be tax laws must be written, they must be clear, and the tax claims must be determinable in advance. Otherwise, you spoil the fun for the population because you block their money. They can't use it for years, and that's completely unnecessary. You can't even calculate in advance, for example, for which amount of money you are willing to work for somebody. Might be that you say, if I work for somebody for a month, I need to have a certain amount of net income to be able to carry through, to hold, to pay my rent, to cover my need of food and drink, and so, and to feed my family. Need, let's say, 2,000 euro net, and then you would have to calculate how much gross income do I need. All that is no longer possible if there is not sufficient clarity of taxation, and that is the reason why no legislator can violate this principle without grave consequences. Sometimes they do because the politicians involved, the people writing laws in parliament, and so not always clearly see what it does to a population in the long run if one begins to deviate from these principles. In the short run, if you just make one situation uncertain, it will not be the ruin of your whole state, but in the medium term, that will happen more and more. And that's a problem, ladies and gentlemen. When it happens more and more, that additional damage done to the people gets more and more burdensome, and so economy will suffer more and more from the effects. And as this is something which happens slowly, probably once you begin with that, the development downwards can't be stopped anymore. So it's highly important to underline and mention the importance of that principle of certainty and clarity of taxation everywhere, where one can do. Yeah. Now, equality of taxation is a different aspect. Equality of taxation means that everybody to whom the law or for whom the law um, assigns a tax payment, or from whom the law says it will claim a tax, that everybody then must indeed pay that tax. And that debates are not possible. Why? Well, one knows from experiments with primates, so chimpanzees or gorillas, and with other human beings, that people react highly aggressive to unfair treatment. It's hard enough to suffer and to tolerate that people take away a bit of your money in order to finance the state. Now, when you see that others in the same situation are spared, you begin to ask yourself questions. That is unfair, isn't it? So, a basic idea then is if a tax law, for example, says everyone has to pay a tax of exactly 1,000 euro, then fairness requires that indeed everybody is forced to pay that amount. Now, think about exceptions. If, for example, one begins to complain, but I am sick, I am old, blah, blah, and so on. And now imagine the tax officer gives in and says, yes, for you it's too much of a hardship. Let's forget you, or just give me 800 instead of the required 1,000. The first consequences would be the tax claims are then no longer defined in the law, but by the personal opinion of the officer who collects them. Several people get into contact with a very hard tax officer, enforcing the law as it is written, literally, pay 1,000, pay 1,000, pay 1,000. And the others are confronted with somebody who is more liberal. Okay, 1,000 you have to pay, give me 800, and you 700, and you full 1,000. Reason, well, I don't like you. Or, well, you didn't tell me an impressive story. So you see, in that case, the tax burden would no longer depend on the law, but on the question, how can tell the most impressive stories about I'm so bad off, and so the first thing would be the first consequence, if we want fairness and if we want taxes to be defined really by law, then we must insist that exactly that what is written in the law will be done. Now you will probably say, but there are some people for 1,000 is really too much. And the answer is yes, but when or if that is the case, that will be more often the case. And so, to be just and fair, the exceptions for these people should then also be clearly stated in the law, so that the exceptions do not depend on how good somebody can impress others by by telling pitiful stories. Oh, so old, so sick. Perhaps others are more proud they can't beg so impressively. So in the end, people would not be taxed on the basis of their financial situation, but on the abilities to impress others, or on the amount of their lack of pride, and that's not fair. So the final conclusion should be, if you want to have an equal and fair taxation, then the first conclusion must be taxes should be collected exactly as they have been laid down in the law, and if exceptions should be made, that should also be considered by the legislators, and these exceptions should then also be clearly defined in the law. For example, if we accept that sickness is an excuse to pay less, we should then say clearly which sickness qualifies for an exemption and how much the reduction should be. Otherwise, we end up with arbitrary behavior of the people involved. One tax inspector is brutal and always takes the 1,000. The other one gives a reduction of 100 for sickness, the next one of 120. And so you are no longer taxed on the basis of fairness, but of coincidence. It depends on the person who executes the tax laws, and that's no longer legality of taxation. So equality is important. By the way, if you think about equality of taxation, is this mere theory or really can it have drastic consequences? And the answer is, well, there are the United States of America. Why did they happen to become independent from the British? Well, there were several grievances which they had against the colonial governments, but one gained popularity. That was, we do not want to get taxed without having a representative in the London Parliament. Huh? So the mere feeling to get taxed in an unfair way brought these people to revolution or made revolution popular in a way that 13 states broke away from the British Empire, by the way, in 1776, exactly when Adam Smith wrote about his canons of taxation. So, violating the basic principles for good taxation is a risky matter. Huh? Um, Certain kinds of unfairness can be tolerated by people, but when it comes to plundering their money, well, that's something which you can feel very drastically and where people usually get a bit of nervous. So it's not recommendable, and you should follow these principles also for political reasons. Okay. Um, Equality of taxation implies something else because you want to treat people fairly, then you should define in the law already, criteria how you distribute the overall tax burden or tax revenue which the state needs to the individual taxpayers. And the criteria by which you distribute that should be considered as just by the population. For example, taking 1,000 euro of everybody sounds fair at the first glance. But now imagine there is one person who has only a monthly income of 1,100 and another one has an income of 1 million. Now have a look to what it does to these people and what it does to their everyday life and their possibilities to live. Then you see if you take that 1,000 euro away from the millionaire, there is no impact on everyday life for the millionaire. So that is not even felt. On the other hand, if you see that poor person having 1,100 euro of income, then only 100 are left. So that's starvation, what is caused by this approach for that person. So the effect for the two people involved is drastically different. That makes clear that probably a fair tax is not just a tax where you demand an equal amount from every person in the population, but that you will have to look for criteria by which you can distribute the tax burden in a fair way. So at least that's not always so simple, but you will have to define these criteria naturally in the tax law, because otherwise, again, you have arbitrary behavior by the persons involved. So here I have on this slide a small little example for the cheapness or economy of taxation. Imagine that's the fourth principle, the idea that the bureaucracy combined with tax should be kept as low as possible. By the way, you must clearly see there is a trade-off or a conflict between two aims. First, you want to be just and fair, but if you really do this with utmost perfection, then probably the bureaucracy costs for handling that tax become very, very high. Now, in my example, let's imagine a state needs 1,000 euro to spend them, so they need to collect 1,000 euro. Now somebody thinks about fair treatment for a whole life, and in the end, the procedure to levy the tax is designed in a rather complicated way. The collecting cost of that tax then amount to 90,000. That's 9 times the amount which you really need. And so in the end, your state would have to collect 100,000 euro because you need 10,000 to spend and 90,000 to collect. And naturally, the collection cost of the tax must be covered by the state revenue too. Now, on the other hand, it might be that a more simple solution, a bit less fairly, but still workable, would cost only 5,000 euro. Now you see what you are doing to your taxpayers by insisting in absolute fairness. In the one case, you get away with collecting 15,000 from the population. In the other way, you are absolutely fair, but that fairness costs everybody 10 times the necessary amount, and they will probably not appreciate that. If they have a reasonable approach, they would probably say, okay, treat me a bit unfair and I pay 150. That's far better for me than getting treated with perfect fairness and having to pay 900. So cheapness of taxation is also a value in itself. Also, that can be violated slowly. But if you begin to violate that principle, it's imaginable or can be foreseen that it will not be a single case, so that in the long run, more and more tax laws will deviate from that aim. And so in the end, the taxpayers end up with having to finance many, many unnecessary costs, which could be avoided by a smaller bureaucratic approach. So the state should avoid collecting taxes and designing them in a way which provokes more expense for collecting them than necessary. But it's a trade-off. Naturally, collecting 1,000 from everybody in the population is the most simple method. Very low administration costs, no tax return sheets to fill out. The only thing would be you just ask everybody, did you already pay? Show me your receipt, your confirmation that you paid. If not, give me 1,000. Very simple approach, very low amount of collection costs, but highly unfair, so not tolerable. So you see, it's a trade-off which you have to face there. So to sum up what we should keep in mind, important thing is legality of taxation, tax laws. No, tax claims should be defined by law. No tax without a law. And equality of taxation requires that the tax burden should be distributed among the population according to criteria which can be regarded by the people involved as fair, so that especially people in the same situation under the aspect of the law should pay the same amount, and that exceptions should not be made possible apart from the case where the law itself already said under these aspects an exception should be granted. So where the representatives of the population already accepted that, so that the population itself probably already accepts, okay, for these guys and girls we can't be so strict as in the case of the others. And you should also keep certainty and economy of taxation in mind.